Even in a rising interest rate environment, a lot of investors are looking for stocks that pay a high dividend yield, and for good reason. That high interest rate environment could continue to affect the valuation of the stock market, creating risk for investors and impacting their total returns. I'm Jason Hall. This is The Smattering, and we're going to talk about a couple of high yield dividend stocks that look attractive right now. I'm joined by my good friend Tyler Crow. Hey, Tyler.
Good morning.
All right, before we get going here, I just want to remind our viewers that we get to do these videos because of our partnership with The Motley Fool. If you're looking for even more great stock ideas than the two we're about to give you, go to our link, fool.com/The Smattering. The Fool is going to give you its 10 best stocks to buy right now. If you haven't checked it out, do it right now. Okay, Tyler, what's your stock first?
Yeah, so the company, if we're talking high yield, one of the places I am very attracted to right now is the midstream oil and gas business. So that's all the infrastructure, the pipelines, the processing, all the stuff that kind of goes in between it coming out of the well and ending up at the gas pump or any other thing that you use for oil and gas for. And the company that is of particular interest to me right now is Enterprise Products Partners. It's a company I have known, owned, followed for quite some time. And it's just been one of the best operators in this space and one of the best stewards of investor capital. I think that's one of the more important things you need to look for in this industry, because all too often there are a lot of empire builders more interested in growing the size of their assets than actually returning value to shareholders. And Enterprise has been better about the latter. They currently have a dividend yield or distribution yield, because it's a master limited partnership, of 7.8%. It's one of the highest yields that it has had in many, many years.
Basically, you ignore that crazy peak in 2020 during the oil crash. Yeah. You're talking about more than a decade since you earned the yield that it's paying out now.
Yeah, absent the pandemic, when everybody was pooping their pants about the oil market and everything associated with it, basically, greatfinancialcrisis.com bust types of yield for this particular company. Like I was saying, good operator, good steward of capital. One thing that they have always been able to do is manage their debt load, manage how much their payout is relative to their capital investments, because in the midstream business, it is a very intense capital upfront business for very long-tailed streams of cash. And so, you take on a lot of debt, end up usually using equity to pay for things in the beginning. But they've been very prudent about, not using too much outside capital to make things happen. And that's been one of the more...
Not getting too leveraged, being able to consistently, modestly grow their cash flows and increase the dividend that they pay to their investors, right?
Yep. If there was anything that I would, kind of not be super interested in it right now, is their growth profile right now is like the new investments they have coming online. It's pretty modest. So I don't think investors should be expecting monster like 10, 11, 12% distribution increases anytime soon. This is going to be a relatively slow grower. But at a 7.8 yield, that's okay. Like if I'm thinking about total returns, 7.8 yield now with 3% growth on top of it, that's a good long-term return. And I think it's something that investors should seriously consider.
All right, I'm gonna talk about one here, Tyler. This is one that I know you know as well. And it doesn't pay as high of a yield, but I think it's one that has a lot of the same characteristics in terms of their ability to manage their capital profile has proven to be really impressive. And the tailwinds support their ability to continue to grow the payout and also generate, I expect, some pretty good returns on that invested capital, shareholder capital as well. And that's Brookfield Renewable. So Brookfield Renewable is part of the Brookfield group of entities that invest in different areas. And in the case of Brookfield Renewable, obviously it's renewable energy, but it's important to understand where in the value chain they exist. And to a certain extent, it's a little bit of kind of the same model of how Enterprise Products exists. The difference is these guys actually produce the electricity and then they sell it on long-term contracts and provide it into the market. The key is they benefit from the same long-term contract structure that you see from the midstream industry that can be really compelling for dividend investors. But because it's renewables, there's that tailwind of growth as we need more energy around the world. And also as we see some displacement of things like coal in a lot of the developed world, right? So what does Brookfield Renewable do? Again, they invest in these utility scale projects. They also invest in very large distributed commercial solar. So think about solar on top of a Walmart or on top of a parking deck or something like that, that produces a lot of power, but it's not utility where it's producing it and sending it directly into the grid and selling it, right? So it's a really, really compelling business. They found the economics to be very good because they have tremendous sources of capital as part of that Brookfield alternative asset management business. So they have a lot of capital partners that can invest with them, that can help them get a lot of these deals done. And again, the structure, we're talking 20-year contracts and longer for the cash flows from those assets, or for the energy from those assets, and that can generate substantial, predictable cash flows over time. I want to take a moment and share, just like we did with Enterprise, I want to share the total returns over the long term here. And if we look at the kind of returns that you've seen from Brookfield, it has generated incredible total returns. It's absolutely outperformed the market. It has a long history of growing that dividend. Now, I do want to say one thing about the dividend. You see, more recently, there's been a bit of a drop in the dividend. This is something really important that happened. Brookfield Renewable spun out a corporate equivalent at the same time that you saw that drop in the dividend. When it did that spin out, it actually awarded existing shareholders a portion of Brookfield Renewable Corporation that was equivalent to the discount in the dividend, right? So you factor in the total return and the true dividend growth for long-term shareholders, you didn't even really see a drop in it. It's an incredible business, and their ability to generate returns is wonderful. So, Tyler, any thoughts about Brookfield?
Yeah, there's two things that make them I would say, superior to a lot of people in the renewable space. Number one, like you were saying, with its access to cheaper capital that you see thanks to Brookfield Asset Management and the kind of the larger Brookfield parent that it has available to it, cost of capital for these capital intense businesses is a huge advantage. You can underwrite deals better because your weighted average cost of capital is lower and makes it easier to do deals. And at the same time, Brookfield in general and through its renewable business has been very good at underwriting great deals and finding distressed deals from other people and buying them at super discounts. We saw it with their hydroelectric acquisition in Colombia back in 2010. They bought them out of bankruptcy. They bought Terraform Power out of Sun Edison's bankruptcy. And if we were to,
and that was like the seed for its wind and solar business that's been the focus over the past 7 or 8 years.
So in the chance that we start to see a higher interest rate, higher inflation environment, all of these people who underwrote at poor deals and get hit with higher inflation and get into a distressed place, I think you could see somebody like a Brookfield come in and start making some of those distressed deals that have made them so successful again.